The price of gold has surged dramatically over the last fiscal year, reaching levels not seen in recent history. This surge reflects a palpable sense of unease in global markets where volatility has become the new norm. Investors are increasingly looking for safe havens, and gold, with its enduring value and historical resilience, is emerging as a favored choice. The allure of gold lies in its ability to retain value even when other assets falter. This flight to safety is being driven by a confluence of factors, each adding to the uncertainty that plagues the global economy. From geopolitical tensions and economic uncertainty to rising inflation, the reasons are manifold. There's also a growing crisis of confidence in traditional financial instruments, which seem increasingly unreliable. This surge in gold prices is not merely a blip on the radar of the financial world. It is a significant indicator of broader economic shifts. It signifies a deeper shift in the global economic landscape, a move away from traditional fiat currencies and towards tangible assets that have stood the test of time. This trend highlights a growing preference for assets that offer stability and security in uncertain times. As the world grapples with unprecedented challenges, from pandemics to war, the role of gold becomes even more pronounced. Gold is once again proving its worth as a store of value and a hedge against uncertainty, reaffirming its status as a timeless asset. Why is gold experiencing such a resurgence in popularity? What is it about this precious metal that continues to captivate investors and collectors alike? The answer lies in its unique position as a safe haven asset, a role it has played for centuries. Unlike fiat currencies, which are essentially government-issued IOUs, gold has intrinsic value. This means its worth is not dependent on any government or financial institution. It cannot be printed into oblivion by central banks, nor can it be devalued by political whims. This makes it a reliable store of value. This inherent stability makes gold particularly attractive in times of crisis, when trust in traditional financial institutions wanes. People turn to gold as a hedge against uncertainty. Throughout history, gold has served as a refuge for investors during periods of economic turmoil, social unrest, and political upheaval. Its value remains steadfast even when other assets falter. From the fall of the Roman Empire to the financial crisis of 2008, gold has consistently held its value, providing a sense of security and stability in a world often characterized by volatility and uncertainty. Its legacy as a dependable asset is unmatched. This enduring appeal is rooted in gold's tangible nature, its scarcity, and its universal acceptance as a store of value. It is a timeless asset that continues to shine brightly in the financial world. In an increasingly digital and intangible world, there is a growing desire for assets that one can hold. Assets that have intrinsic worth beyond the fluctuating valuations of the stock market or the promises of governments. Gold, with its physical presence and historical legacy, fulfills this need for tangibility. Unlike cryptocurrencies, which exist solely in the digital realm, gold has a weight, a texture, a history that stretches back millennia. It is a tangible reminder of enduring value in a world often characterized by ephemerality. This tangible nature, coupled with its historical resilience, makes gold a particularly attractive asset for investors seeking to preserve wealth across generations. Section 4. Impact on global trade and economies. The resurgence of gold as a safe haven asset has significant implications for global trade and national economies. As demand for gold increases, its price rises, creating a ripple effect throughout the global financial system. This can impact currency valuations, interest rates, and even the balance of trade between nations. Furthermore, the shift towards gold as a preferred store of value could potentially reduce the dominance of the US dollar in international transactions. If nations begin to favor gold-backed currencies or use gold directly in bilateral trade agreements, it could lead to a more multipolar global financial system. This shift, while gradual, could have profound implications for the future of global trade and finance. Section 5. Central banks and the gold rush. Central banks around the world, recognizing gold's enduring value and its potential role in a multipolar financial system, have been steadily increasing their gold reserves in recent years. This trend is particularly noticeable in countries like China and Russia, which are actively seeking to reduce their reliance on the US dollar and diversify their foreign exchange reserves. The motivations behind these central bank gold purchases are multifaceted. They represent a strategic move to hedge against currency fluctuations, reduce exposure to geopolitical risks, and potentially enhance national economic sovereignty in an increasingly uncertain world. This trend of central bank gold accumulation is likely to continue, further bolstering the precious metal's status as a safe haven asset. Section 6. Gold versus the dollar. A shifting landscape? The resurgence of gold as a safe haven asset raises questions about the future of the US dollar as the world's reserve currency. Investors are increasingly looking at gold as a hedge against economic instability and currency devaluation. While the dollar remains dominant for now, its position is not unassailable. Historical precedents show that no currency holds the top spot forever, and shifts in global economic power can lead to changes in reserve currency status. The growing national debts of the United States, coupled with inflationary pressures and geopolitical uncertainties, are gradually eroding confidence in the greenback. These factors contribute to a complex financial environment where the dollar's supremacy is increasingly questioned. While it is premature to predict the demise of the dollar, the rise of gold as an alternative store of value suggests a potential shift in the global financial landscape. Central banks around the world are diversifying their reserves, adding more gold to their holdings. This shift, if it materializes, will be gradual and multifaceted, characterized by a move towards a more multipolar system where gold plays a more prominent role in international transactions and reserve holdings. The future financial landscape may see a balance between multiple currencies and assets, with gold being a key player. Section 7. Conclusion. A golden lesson in uncertainty. The recent surge in gold prices serves as a potent reminder of the enduring value of tangible assets, particularly in times of global uncertainty. As investors seek refuge from volatile markets and geopolitical risks, gold shines brightly, its allure enhanced by its historical legacy as a safe haven asset. The world is at a crossroads, grappling with unprecedented challenges that are testing the very foundations of the global financial system. In these uncertain times, gold offers a valuable lesson: the importance of diversification, the need for tangible assets, and the enduring appeal of a safe haven that has stood the test of time.